guess everyone can hear me. I see some familiar faces, and I'm glad that I'm not seeing so many are not so familiar. So first, the initial agenda had Freda Mitambo. So for those who are expecting Freda, please bear with me. I'll be your Freda for now. Yeah. So my name is Steve Magati. I'm a partner at Deloitte, taking care of risk advisory and sustainability. But I'm also an accountant. I started my career in the financial statements audit as a financial statements accountant with PwC a while back, then transitioned into risk advisory and sustainability. So the two things that I want to put out there as we start. One is that as we were preparing for the presentation, we looked through the agenda for the day, and we realized that there is a lot that has been included that I will presume has been covered. For example, just talking about REITs in general, especially that's your area that you know better than I do. Will you use this one? Okay, Patrick. And then also on financial reporting, there may be a bit that has been covered. Yeah, so most of the two areas that we are going to cover this afternoon builds from what has been covered in the other sessions. So there is a risk that I may be saying some things that you heard previously, then you can just reconcile in your mind. There is also the risk that I may leave out something that I presumed had been covered, but has not been covered. And that is the essence of discussion. Then we can get clarification as we go along. Does that make sense? We are good. Yeah, so I just have to figure out where I'll sit to see what you're projecting. Yeah. Thank you. So, without much ado, let me also just confirm how many minutes I have. I'd been told that I have 45 minutes?
No.
Or 30? No. Yes. So I just want to confirm so that at least we start on a good footing. How many of us here are accountants in financial reporting or something to do with it? Or have been before? I saw Samuel somewhere, some karaoke somewhere. Those who've transitioned like myself, how many are accountants, financial reporting? Good. And the others, I've seen that I have only 20 minutes. Wow. To cover both. Let me just ask. To cover both financial reporting and sustainability. Okay. Yeah, so we can start. we can start. So we'll just talk about financial reporting for REITs specifically. In 20? Yes. Okay. So, financial reporting for REITs And talking to you as practitioners and as people who are in this space, and in the Kenyan market specifically, so where we predominantly talk about IREITs and D-REITs, and not the others. So there are just a few things that we have to be cognizant of as we report. So I'll not go into the details as to what are REITs. Those ones you can even tell me better. So if we can move to the next slide. Fantastic. Yeah, it's moving, but slowly. Yeah. So I just want to point out some of the things that we need to be cognizant about, especially for the people in your space, that you need to consider and why it's important for you. For REITs, and as you report to your investors, you just have to be cognizant of the fact of that earnings do fluctuate depending on the level of occupation. Yeah? Markets also shift or react to changes in your reported earnings because the units, and especially if it's listed, the unit value that you compute as a result, people look at it and they react to it. Therefore, it's very important to be cognizant of that as you report. And then, therefore, your focus should be on those 4 areas that I've listed up there. Investment considerations, that is something that you do better, looking at what you invest in. Cash management, financial reporting, and corporate governance. And we'll see how corporate governance then becomes very, very important when you are reporting. So nowadays, investors don't just want to see the numbers, but I want to be comfortable that those numbers can be sustained in the long run. And the only way that you give confidence that the numbers are sustained in the long run is more around the governance. What I've listed there, which I'll not go through, for you to be able to report your financials on a quarterly basis, what is it that you need to put in place? And this now speaks to the accountants and those who are in the financial reporting. And I'll not go through all of them. You will read those ones at your own time. But I want to look at number 2, which is important. We always talk about people, process, and systems. So you must have the right people in place, the right processes in place, and the right systems in place to enable you to report with that level of frequency and accuracy. So that is important, that you have to deploy those ones in place. This is the animal that I was rushing to get to. And that then speaks to the accountants. So for those of us who are not accountants, they are the building blocks that then enable your finance people to do the reporting. And for the finance people who are doing the reporting, I just wanted to draw your attention to IFRS 13, fair value measurement. This is a companion IFRS, so to speak, in that it cannot work in isolation and does not work in isolation. When you are talking about fair value, there is the when and the how. IFRS 13 has now consolidated the how to fair value in all aspects that require fair valuation. The when still remains in the respective standards. That's why it's a companion standard. So the when will be determined, for example, under IS 39, IS 40, IFRS 5. So those will tell you when to fair value. But the how is in IFRS 13. And that's why I thought, let me just talk to you about IFRS 13 and a little bit, because IFRS 13 then gives you the guidance on how to fair value. And that is important. Previously, people used to go through several standards to know how to do the fair valuation, but IFRS 13 has now consolidated it. If you've determined when you need to fair value, and especially for you, it is important that then that goes to IFRS. You go to IFRS 13. So, what is meant by fair value? How should an entity measure fair value? And what should be disclosed about the fair valuation? So especially for us in this room, we have to report on with such regularity to enable our investors make decisions and be able to determine the fair value of the assets that we are holding under our trusts. Therefore, it is important that we appreciate that. So what is it that we need to do? What is fair value? How should it be done? And that is the essence of this IFRS. So just forget about the IFRS, but think about the principles. So for the assets, the price that would be received to sell the asset. And there are several assumptions that have been listed out there. And for the liability on the other side, you are saying price that would be paid to transfer the liability. And there I want to make a distinction. It's not what you expect to pay, but what a market participant would be willing to pay to take that liability off you. Does that make sense? That a reasonable market participant would be willing to pay to take that liability off you. So it's not what you will be willing to pay. Likewise, on the asset side, it's not what you are holding it at, but what a market participant in the principal market or a market that would give you maximum value would be willing to pay. So once we get the principles right, then IFRS 13 from here then guides you on how to do it. That's why they say, what is fair value? In an orderly transaction. An orderly transaction between independent market participants. So if you are transferring a unit from one entity to another within the same group, that would not be considered as a fair value. And then we are talking about market participants at the measurement date. So at what date are you doing the valuation, and then you estimate the values then. And what then you'd be required to do is also to disclose the assumptions that you've used. And this is why that IFRS is important, because once you've determined when to fair value and under which IFRS or IAS, then you come here and you are guided on how to do it. So, in the current operating environment, those are the items that you'll need to consider. And again, just as we were saying, I'll not talk through all of them, but what I want us to pay attention to, because of the people in the room, fair value depression in periods of decrease in volume and activity. Remember the example that I was giving earlier, that the occupancy has gone down, the expected cash flows have changed, there is the inflation, and then there is the depression in the operating activities, then we need to be careful about that. Those are the items that we need to disclose. Then the reporting considerations that you need to bear in mind, you operate in a space which is regulated. We expect high standards from you. That is, the market expects high standard. And then you consider matters that you need to be communicated. There is a trail there on key audit matters, but those are just matters that require a lot of judgment and discussions for you as management before you come to the values that you are looking at. That was fast. Let me now change gears. I'm trying to do this, to cover this in 20 minutes. Let me now quickly just change gears to sustainability. That was a refresher. But sustainability, at least we are at a good point where we are no longer in discussions as to what it is, why it's relevant. I think everyone agrees that it's relevant. And it makes good business sense. Yeah, we are successful because we take care of our society, as opposed to we derive our success from our society. So we need to take care of our environment and our society, and that's the reason we are successful. So, a few things that I want to point out, and this is also assuming that there is a lot of discussion that you've had previously during the day on sustainability. So reporting on ESG is now taking center stage. How many of us are familiar with IFRS S1 and IFRS S2, or have heard of it? Okay. How many of us are familiar with TCFD? Okay. Good. You are not in the wrong place. You will. The reason I've mentioned IFRS S1 and IFRS S2, because we have specific standards that relate to climate-related disclosures and other sustainability disclosures. And that just shows you that we've come a long way from a point where there were several frameworks and several standards to a point where we are getting to convergence. And we are getting to a point where we have guidance to disclose. So, sorry, before I go here, I just wanted to point out a few things. So, we are saying that there is maturity that we are getting in ESG reporting because, one, there is improved quality and consistency of the disclosures that have been coming around over a period of time. And if you look at it, investors are increasingly analyzing what we disclose about our sustainability credentials. And people nowadays go beyond looking at just the financial performance. And for us who provide investment vehicles, just like in the banking sector, people talk about green bonds, investors are also looking at green investments, so to speak. So it's an opportune time that even for you, you can look at your investments and say, how am I positioned around this ESG? And can I comfortably say, for someone who is looking for a green investment, do we have REITs that can attract such kind of finances? And it's estimated that going forward, billions of dollars are likely to go into green investments. You are dealing with a population that are becoming so conscious around the issues of sustainability that whatever purchase, whatever investments we make, we are asking about ESG credentials. ESG metrics are increasingly getting understood because of the standards and the convergence that we are having nowadays. The guidance that has been given, it's very, very easy for us to measure the metrics that we have. That building that you have, what is the waste that it emits? What CO2? What are the greenhouse gases that it emits? If we are using solar, are we telling our story in the right way? If we are recycling water, are we telling our story in the right way that an investor which is looking for a sustainable investment can tap into? So this just gives a framework of where we've come to, all the way from 1997 to where we are. And remember what I was talking about, the IFRSs. And that shows you that from this plethora of standards and frameworks, we are now getting to a point where there is convergence. And for the accountants and those who are helping us with reporting, we need to start thinking about those two IFRSs. And sustainability reporting is not just for the accountants in the room. It's for those of us who, first of all, you evaluate the building that you want to invest in. And if you are having a REIT, as you develop, you also think about the sustainability credentials of the building that you are putting in place. And therefore, it will make sense, even for the person who is reporting, to have something to report. That one is just for you, for notes. I'll not go through it in the interest of time. I just want us to talk about, even that one is in the interest of time, I'll not talk about it. That just shows you the journey that we've walked through the reporting standards. But I want us just to focus on where we are now, so that you look at what we've done under IFRS and IFRSs. And here I want to mention something which is important, and that's why I keep saying, that's why I was saying it's not the responsibility of the people reporting. Those standards emphasize 4 things, and these are the 4 things that you need to take away when it comes to sustainability. One is the governance, and that governance starts from your purpose and aspirations. So as you're putting together the vehicle, as you're putting together the trust, what do you want to come out as your sustainability credentials? Is it more on the climate side? Is it more on the social side? And how do you take it? Then from there, it informs your strategy. Then the strategy that you incorporate in the vehicle and the strategy that you envisage should speak to your purpose and your aspirations around sustainability, or ESG. Then the risk management. And this is very, very critical. Risk management in all aspects, and in most cases, people talk about the climate-related risks. But even if you leave alone the climate-related risks, you also need to think about the social side of it. Governance has been beaten for a very long time. So the most important one that we need to be thinking about is the climate. And that's why I was giving the examples of how do you use resources? The water, are you recycling? And are you telling your story right? How do you deal with waste, especially solid waste? And are you telling your story right? How are you dealing with electricity? Have you put some solar? How are you telling your story right? And if you incorporate all that, then reporting and telling that story on your sustainability credentials then makes sense. And that will align to all the standards that we were talking about. Even if you go to TCFD or TNFD, that will just piece together. And then we talk about metrics and targets, because you have to baseline. It doesn't mean that that property that you currently have in your portfolio, you cannot baseline and start from there. You have to baseline and assess where you are in all those, and then you start having your aspirations. You know your net emissions, where do you want to get to? You know your waste, where do you want to get to? You know your usage of water, where do you want to get to? Yeah, I'll not talk about that. And yes, so this just shows you the roadmap. If you are starting now, from where you are to where you want to get to. So materiality assessment and stakeholder engagement is just looking at what is material for you and what is material for the investment that you have. And that is all that you need to disclose. And that has made a big difference, because previously people used to wonder, do I have to disclose everything? So there is the concept of materiality. It has to be material enough to enable you to worry about it. Then the governance, all the way to you start from limited assurance. After you've put everything together, you can measure everything that you have, and you've put your story together. You can start by doing limited assurance before you go to the full assurance. Here, what we wanted to project is just to show you what's happening in the region, the regulatory environment that we are in. So even our regulators have put in place some guidelines and around sustainability. This is just for notes when we get the slides. And I think with that, I'll stop there and maybe just get time for clarifications or questions if need be.
Absolutely. Let's appreciate our speaker with a beautiful clap. Thank you so much. Well done. So I don't know, I would have wanted, let me see if there's any question that has been sent. There's some that you can see there. I can see some, but just very quickly, I think we can take a quick one here. Yes, please.
Thank you very much for that presentation. I think my question is, as you're saying that the reporting on ESG are sort of harmonizing now as we move along, are there any particular that you think, or in your experience, should be considered for real estate investments? Because most of them, I mean, they look like there are many, and they're also quite expensive to kind of subscribe to. So which ones would you guide this room in terms of focusing on? And also, what have you seen in your experience, and what is practical? Because some of those things, are maybe based on standards from the developed markets, where, for example, they're big on heating and cooling because of the different seasons. So I just would like to have a view of what we should be focusing on in terms of setting in the setup of the REIT structure. Thank you.
Okay. Thank you. I just made a request for the slides to go back up so that I can go somewhere there. So that's a good question. Let me just start with, how do you start? How do you start? You will not start from one section, but you have to start from the top. There must be, and that's why starting from the purpose is important, and your aspirations. And starting from the top would mean, look at your purpose, look at your strategy. What is it that you want to achieve, and how do you want to incorporate this? Then the second thing is realizing that sustainability is part of you doing business, and it's not to be considered in isolation. And if you do that, one thing that you'll realize is that you are already doing something. It's only that you are not telling the story. However little it is. That's the second point that I wanted to highlight. Then moving quickly to the standards, what we've seen. The convergence is such a welcome relief, because before there were several other standards and frameworks that people are wondering, what do we need to do? So we've seen people converging around the IFRSs, and because now we have TNFD that came in to replace TCFD. People were talking about TCFD, but now we are talking about natural resources, not just climate-related disclosures, but we are talking about all the natural resources. And that's why I'm restricting myself from talking about just climate, but talking about water that you use, the impact that you have on society. Are we taking those ones into consideration? So if you hadn't started the journey before, then the best place to go to is just look at what's happening in the IFRS space and what is happening around TNFD. There are other frameworks. For example, IFC have their own framework that they use, which is not so far from this. But if you align to this, then you can use others as complementary. The other interesting thing is that most of these are not yet compulsory. Most of them are voluntary. But it's good to start with them, and that's why I'm saying it's important for us to start from the top. The board must see the sense that its sustainability is part of our business and it's not in isolation. I don't know whether that responds to you. Yeah.
I don't know whether I need to pay some fees to get the direct answer to the question I'm trying to ask.
Yeah, okay.
So I hear what you're saying. Now, I think maybe for REITs, at the end of the day, we need to raise money.
Yes.
So for me to tap into, these green investors,
Yeah.
what kind of, because I don't think I can subscribe to all of them.
No.
So which ones would you, in your experience, because you review a lot of these vehicles,
Yeah.
what would you say, even if they're not compulsory, what would you say is more attractive to bring capital? Because at the end of the day, it's all
Yeah.
well and good to have them, but if they're not directly bringing in capital or attracting investors, and
Yeah.
also just maintaining sustainability and all of that,
Yeah.
then we're kind of doing it for nothing at the end of the day, because they're also quite costly.
Yeah.
At the initial onset, but of course, going forward, the cost is kind of mitigated. So I think maybe that's actually what I'd like to hear.
Okay.
Because it would offer a lot of guidance, so that even as we look at all of these ones, there's a bit of direction as to where we should be gearing to.
Go to the last ones, IFRS and TNFD. But what I wanted to say with that long story that I was giving you, that these ones are just for reporting. But before you report, there are those things that you must have done, that you must have put in place. So that comes around governance, your risk management, you assess your materiality and what you want to do. Yeah.
Let's appreciate our speaker one more time. Thank you so much, sir.